Hello. Welcome to my channel, my dear friends. My name is Avilash, I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and we can see the market is behaving like a normal Monday market. It means that there is not much volatility or craziness. Volume is low here. We can expect the market to gain momentum by the US session. As of now, okay, market is trying its best to survive, sustain above the crucial $3,000 level. On Saturday, not Saturday, on Friday, okay, we got to see some profit booking as expected, and market came down to a support of 3,000 and market gave a sharp bounce. I personally panicked and I did not take the buy position, but many of you made good profit. I am very happy. Okay. And now we can see that market structure is still very much bearish because right after the market opening, market showed a little downside, this one. Okay. And if we look at the market structure here, the market structure is not positive, means market is forming lower highs and lower lows. So formation of lower highs and lower lows indicate that market is bearish, isn't it? But we should never forget that market sentiment is above all. And if we look at the market sentiment, this gold edges higher on safe haven demand, Fed optimism. Gold edges higher supported by geopolitical tensions. It means that this market is still under the dominance of the safe haven demand of gold. Means market sentiment wise, gold is bullish. And if we look at the market structure, then gold is bearish. So there is a contradiction between the overall market sentiment fundamental and the technical. And whenever there is a clash, contradiction, okay, the market sentiment always wins. So whatever we are witnessing here, okay, technically is just a correction. It's a temporary thing because it does not have the support of the fundamentals. For example, if any news comes out, okay, and that may trigger a sell, then you can expect that the downside downtrend on gold will continue for the next couple of days and weeks. But without any news, gold is going down. It means that it's a temporary move. And obviously, no market in the world goes up in a straight line, goes down in a straight line. It will have to come down, isn't it? Demand and supply. So the formation of lower highs, lower lows, okay, whatever we can see on the chart right now, it is a temporary thing. So the market is still very much bullish. There is no doubt about it. As a result, it will be better and safer for us still to look for buy positions. But where we need to look for buy positions at support, because if we enter here and there, we will end up paying high price to the market. We will be stuck. We don't want it. So whenever you will see market is bullish, no market in where you are trading, whether it's a gold, forex, stocks, commodity, doesn't matter. Okay, if you see a market is bullish, your permanent trading strategy should be buy at support or buy at dip. Means whenever the market will be coming down, you should look for support so that you can go for a buy. And if market doesn't come for support, sometimes market is very bullish, then you can look for buy at breakout. Simple trading strategy. And in case of a bearish market, downtrend market, if you see the market is under the dominance of sellers, heavy selling is coming, okay, then your best trading strategy is to sell at resistance. Means whenever market will go up, you should look for resistance so that you can go for a sell. And if market is very weak, then you can look for a sell at breakdown. That's it. See, our life's already very complicated, so we should keep our trading simple. Anyway, the next low of gold is going to be very important. If gold breaks 3000 level, okay, then we can expect further correction on gold and we can expect gold to head towards 2950. Okay, if gold breaks 2950, then it may come down to 2900. But at this moment, I do not think gold will be going below 2900. If the correction continues also, okay, this is the level, okay, this is the level where we can expect gold to pause because of price action. And in a bullish market like this, okay, price action works very well. We have been seeing for the last couple of months. So if gold comes down also, okay, if gold breaks 3000, then we can expect 2950 to be the next stop. than 2900. And as we have already discussed on Saturday, that if you're positional trader, swing trader looking for new position in the market, okay, then you should wait for a better price. You should look for market to come down 2950, 2900. That will be the best entry. And if you're already in a buy position on gold as a swing trader, position trader, hold your buy position with a stop loss below 2990. Okay. And whatever levels that we have on the chart are mostly for day traders only, because as a swing trader, position trader, you will be holding position for a couple of days and weeks or months. So obviously you need a discounted price. You don't want to get stuck in a bad position for next 1 or 2 months, isn't it? So wait for the better price. And in this case, the next low, okay, the next low of gold is going to be important. If gold breaks 3000 level, then you can expect the correction to continue. But keep in mind, whenever a correction comes in the market, these are very much temporary. Means after 1 or 2 days, when gold will be going up, okay, it will be a very sharp move. You may not get time to exit also. Okay. So the levels that we discussed on Saturday are still very much valid. The first level where you can look for buy is 3000. Usually in this type of market where market is forming lower highs, lower lows, the support levels are very weak. We should not be looking for support, but gold is fundamentally still very much bullish, and 3000 is a key level. So still we can expect a bounce of 40 to 50 pips initially around 3000. After 40-50 pips, if you see that gold has further potential, then you can continue with your trading stop loss and break even. And the second support on the chart of gold is around 2992, 2991. Already we have discussed on Saturday these levels. The price action, okay, the previous resistance will be working as support here. And then we have 2982, 2977 because of previous support, and we also had FEMA. I do not want to repeat the same stuff and bore you guys again. Okay, so on the chart of gold, we have 4 support levels. The first one is 3000, then 2992, then we have 298277, and lastly 2970. Okay, 2970, I remember, okay, we derived on the overall chart of FIBO. Okay. The FIBO is doing a fine job, so we can expect a good bounce around 2970. So these are the good support levels on the chart of gold where we can look for a buy as a day trader, and they have the potential to give good profit. But today morning I have also added another dotted line here. Okay, now see, I have switched to 15 minutes time frame. So on the 15 minutes time frame, okay, I can see that we have FIBO 61.8% retracement level plus, okay, we have little support around this area. So if you're a day trader, okay, if you have some patience issues like me, okay, then you can look for a quick bounce of 40 pips around 3010. Okay, around this area you can look for a quick bounce of 40 pips. Means you can put your target around 3014 and with a stop loss below 3060. Okay. This is not a very strong level. Okay, on the chart of gold, if we need to talk about support, then this is obviously not a support, but as a day trader we can look for a quick buy around this area. Keep in mind, again I'm repeating, this is a weak level. Okay, if you see that there is a sudden red candle, then just forget about the 3010 level. And in a bullish market like this, if market doesn't come for retracement, what is the next scenario? Second scenario, the second scenario is market will be going up. Okay, and in that case we can look for buy at breakout. But here buying at breakout is not the right option here, because gold going above 3058 is very less. It needs to break 305 and then only we can look for buy at breakout. So let's not talk about this scenario here, because it will take some time for gold. Okay, but we discussed some risky selling opportunities on Saturday. Those are still very much valid. The first selling opportunity was around 3035 on gold, and second selling opportunity was around 3050 on gold. 3050 is a round number psychological resistance, so as a day trader you can look for a quick scalp around this area. But in a bullish market, taking a sell is high risk. Do not forget. These two levels are not for beginners, new traders who do not know how to do proper risk management. If you're an experienced trader, then you can go for it. Or if you're an experienced scalper. 3035 because of previous resistance and also FIBO 61.8% retracement level. Okay, and 3050 is a psychological resistance, and we also have a resistance around 3044 area. Okay, but let's see how market reacts around 3035. Okay, if it works, then only we can expect this to work. So these are risky selling opportunities. Okay, personally, I'm not sure whether I'm going to take or not. Okay, maybe I'm going to take around 3035 small lot. And let's wait and watch. Let's wait for the right time. Do not lose patience, my dear friends. Okay, trading, okay, patience is extremely important. And on Monday, many people, okay, they find it very difficult to control themselves and end up taking some bad trades. My dear friends, it's better to wait than to lose money. We are traders, not gamblers. Thank you so much. Bye bye. Take care.